Gold prices making another move towards the year-to-date highs, and this isn't something that came overnight. Obviously, gold prices have been accelerating to the upside going back to the end of May, actually the last day of May. But since then, we've kind of been holding between this, call it 1340 to 1360 area, and we've been kind of dancing back and forth without any real threat of a pullback. And today's news from the Fed really just propelled prices higher. We didn't quite get to that year-to-date high, but we were nudging right up against it. But a bigger level, I think, on the horizon is 1400. It's a level that really hasn't seen a whole lot of trade since going back to 2013. So it's been a long time since we've traded above that for a sustained period. Likewise, if the Fed is in fact going to be cutting in July, in SEP, possibly in DECE, and then outlook with maybe a dovish outlook, you could see gold prices accelerating very quickly in the near term and in the longer term as well. So right now we are eyeing a year-to-date high, possibly getting north and maybe trading 1370, but the big picture number is 1400. We are not there yet, but likely will be sooner than we thought just a few months ago. And if you look at the dollar got crushed after the Fed announcement. Yes, the Fed is going to be dovish, then the dollar is going to get hit. And what we saw in that is that it basically supported gold prices today. It really hasn't had an adverse effect on gold since the May 31st move, but the dollar obviously can be very sneaky, and if we do start to see a sneaky bid in the dollar with the idea that the Fed maybe won't be as dovish, that could have negative effects on gold prices. We didn't see that today, and we haven't seen that really over the last several weeks. So right now the dollar heading lower basically because of the fact that the Fed's likely going to be cutting rates more aggressively than we had thought just a few months ago. And last, let's look at the speculators. What are they doing now? Yeah, they're adding more longs. They got in ahead of this move that we saw ahead, during, and now post FOMC. They're likely going to be continuing to add for the aforementioned. If rates are going down, if the Fed is going to be dovish, then the dollar is going to get hit and gold prices are going to go up. And I think that 1400 level becomes very key. I think you'll see a big sell up there with the idea that even if we get to 1400, getting through it and above it and staying that way has been very difficult. And I think at this point, because you're going to be looking maybe to transfer out of gold into another asset class. But I think at this point, speculators will just ride the wave. You may see some modest pullbacks, may see some modest speculators selling, but I think ultimately they're going to remain long. And right now they are doing just that. They are long, and I don't expect them to be selling those unless there's a shift at policy from the Fed, unless there's some kind of change in the economy, both of which we don't expect at least over the next 6 months. And I think at this point, speculators are going to wait until they have to sell. And right now they don't have to. They can just hold on to those longs and wait and see what happens. Can we get to 1400? Can we get north of 1400? Because last time we were looking at Fed fund policy rates being cut, we were much higher in gold. So we have a lot of catching up to do. But for right now, just trying to test those year-to-date highs and eyeing on 1400.